Okay, so let us continue our discussion for compound financial instruments, particularly bonds payable with share warrants. Okay, but this time, um, what if the bond payable with share warrant, the fair market value of the bond is unknown. Okay, so let us try this example again. Okay, let us have this example. Okay. Now, still the face amount is 5 million. Okay. Each bond value, okay, each bond certificate has a value of 1,000 pesos pa rin. Okay. So, um, each bond certificate is convertible, includes one share warrant which can purchase a share at 55 per share. Okay. The par value same pa rin at 105. The issue price at 105 pa rin. Okay? But this time, um, the fair market value is unknown. So again, the concept is, um, if the fair market value is unknown, we will use the present value of the bond. Diba? Present value of the bond using the effective rate. Okay? Using the effective rate. Now, so, the effective rate in this particular example, let's say it is 12%, while the nominal rate is 10%. So the term is 10 years, okay, with interest payment annually at December 31. Okay, now, sige. So the first thing that we need to do, okay, the first thing that we need to do is to compute for the present value, which is computed as present value of principal plus present value of interest, di ba? Basic concept. We have already learned this from our previous discussion. Okay? So, the present value, okay, of the principal is computed as, okay, present value principal. Computed as face amount or principal, um, which is in this case, it is 5 million multiplied by the present value factor of 1 at 12% for 10 periods. Which, if we will compute it manually, again, using the effective rate at 12%, it is computed as, di ba? Manually, di ba? 1.12 divided by 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Ha? 0.322. Okay, round to nearest 3 decimal point. So, 5 million, okay, multiplied by 0.322, we have 1,610,000. That is the present value of, okay, present value of principal. Okay. Present value of 1. Ha? The present value of interest ngayon, okay, this is computed as the annual interest, okay, multiplied by present value of ordinary annuity na. Kasi yun nga, multiple payments na yung interest. Hindi na siya present value of 1, which is one-time payment na applicable for the principal. Okay? Present value of an ordinary annuity at 12% for 10 periods. Which, if we are to compute manually, that is 1.12 divided by 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. This is the present value of 1 minus 1, divided by 0.12. So we have 5.650. Okay? The annual interest in this particular problem basically is computed as the face amount equivalent to 5 million, diba? Multiplied by the nominal rate, which in this case it is 10%. So we have 500,000 annual interest. So the present value of the interest payment, we have 500,000 multiplied by 5.65. So that is 28 or 2,825,000. Okay, kuha. So present value principal, we have 1,610,000. Present value interest, we have 2,825,000. So the total present value of the bond, we have 1,610,000 plus 2,825,000. So 4,435,000. Okay? So the issue price, okay, will now be allocated as, okay, the issue price of, diba, 105. So basically, that is equivalent to 5 million times 105. So that is 5,250,000, diba? So the issue price is 5,250,000. Present value of the bond payable, which is at 4,435, okay, less, so 815,000, this will be your equity or the share warrants outstanding. Okay, the share warrants outstanding. Now, face amount, okay, face amount of 5 million less the present value of the bond, or compared with the present value of the bond, which we use in lieu of the fair market value because it is unknown, okay, na 4,435,000, okay, minus 4,435,000, we have 565,000 na this is discount on bonds payable. Okay? So, again, kung titingnan natin, same concept pa rin siya as if, no? Fair value is given, except that the only difference is we need to compute for the present value of the bond. Okay? We need to compute for the present value of the bond. Okay? Now, so how are we going to recognize this per entry on issuance date? Obviously, debit cash at the issue price of 5,250,000, okay? Debit discount on bonds payable na 565,000, okay? Credit bonds payable of 5 million at face amount, then credit share warrants outstanding. Okay? Share warrants outstanding at 815,000. So, basically, that's it. No? That is how we recognize the entry for bonds payable with share warrants, fair market value is unknown. The rest of the procedure, same na yan siya when it comes to regardless if the fair market value is known or unknown. Dito lang tayo nagkakaiba. Okay? Same, now we need to allocate it based on fair market value or present value, whichever is applicable. Okay? Then, credit the equity, the allocated price for the equity portion to share warrants outstanding. So, ang dali lang, di ba? Okay? Okay. Now, so that is for bonds payable with share warrants. Now, let us go to the other type of compound financial instrument, which is convertible bonds. Okay? Now, again, to refresh our concept lang, convertible bonds, again, instead of paying cash, if you are the issuer or if you are the investor, instead of receiving cash, shares of stock will be paid or received by the issuer or by the investor rather. Diba? So, in this particular concept, okay, convertible bonds, on the date of conversion, okay, in the date of conversion, there is a transfer between one particular instrument, okay, between one particular instrument to another particular instrument. That is from that instrument, which is the bonds payable, to the equity instrument, which is the shares of stocks. That is why this is considered as a compound financial instrument because there is that portion na liability siya and there is also that portion na equity siya. Okay? Compound. So, actually, if we are to look at this and how we treat it per accounting, it is the same lang siya with share warrant except that if there is conversion, okay, unlike in the share warrants na makaka-receive pa tayo ng pera for the purchase of price because that is the privilege for a share warrant, dito wala, but rather is full extinguishment of the bond. Okay? Sa share warrant, babayaran yung bond, okay? Yung bond payable, babayaran yun siya ng cash. And if the warrant is exercised, yung shares of stocks, babayaran din niya yung shares of stocks. Albeit in a lower price. Okay? In a lower price. So, kumbaga, same concept, no? May kaunti lang siya na pagkakaiba. Okay? May kaunti lang na pagkakaiba. So that means on issue date, same pa rin na the issue price, we need to allocate it. Okay? We need to allocate it. Priority first, the bonds payable. Okay? In excess, the equity portion. Okay? The allocation is still based at fair market value of the bond without the conversion privilege. Okay? Fair market value of the bond without the conversion privilege, the excess sa equity portion na. But instead of crediting to share warrants outstanding, Okay? Outstanding. Okay? Instead of that, we will credit it to share premium conversion privilege. Okay? So, let's go back to our example. Okay? Let's go back to this example. Now, what if hindi na to siya um, share warrant, but rather this is a convertible bonds. Okay? So, let me just erase the writings in the board. So, okay. Okay. So, ito pa rin na example. Okay? So, what if instead of share warrants to, okay? Okay? So, hindi na to siya share warrants. Okay? So, wala nang share price. Still, the share has a par value of 50. The issue price, instead of 105, let's say, gawin natin to 110. Okay? Gawin natin 110. 1,000. Okay? Gawin natin 110. And let's say, given mo na yung fair market value. Okay? Let's say, given yung fair market value. Let's say, ang fair market value is 100. Okay? Effective rate, sige. Let's say it's still at 12%. Okay? Effective rate still at 12%. Then, nominal rate 10%. Then, 10 years. Okay? So, let's just add na, let's say, yung date of issue nito, January 1, 2015. Okay? Date of issue is January 1, 2015. And then, okay. So, that means, kung 10 years siya, January 1, 2015 yung date of issue, the date of maturity basically is January 1, 2025. So that is January 1, January 1, 2016, 2017, 2018, 2019, 2020, 21, 22, 23, 24, 25. So 10 years. Okay? January 1, 2025. So, I guess this would be, no? Okay na tayo sa example. Okay? So, ito. So, same procedure on the date of issue, which is January 1, 2015. The allocated price, which is at 110, okay? The allocated price, which is at 110, so basically, we'll compute that at 5 million times 110%, di ba? So, 5 million face amount times 110. So, we have 5,500,000 issue price. Again, remember ha, this is now a convertible bond. Okay? So, now, the fair market value of the bond without the bond conversion is 100. So, that means, I know, mali yung example natin, no? So, let's say this is not 100 rather. But, let's say, this is 98. Okay, let's say this is 98. Okay. Okay, not 100 the fair market value of the bond without the conversion na, it is 98. Okay. So, the fair market value is computed as the face amount multiplied by 98%. So, that would be 5 million times 0.98. So, that is 4,900,000. So, this is your fair market value. Okay? So, issue price of 5 million less the fair market value of the bond without the conversion privilege of 4,900,000. The issue price is not 5 million, but rather 5,500,000. Again, issue price of 5,500,000 less the fair market value of the bond. So, we have 600,000 for the equity or the conversion privilege, no? So, how are we going to recognize this per entry on January 1, 2015? But before that, we also need to note na there is a discount on bonds payable, diba? Because face amount na 5 million, okay, less the fair market value of 4,900,000, diba? We have 100,000, okay? We have 100,000 of discount. Okay? We have 100,000 of discount. So, entry, January 1, 2015, date of issue. Debit, cash, at issue price na 5,500,000. Okay? Because we have a discount, debit, discount on bonds payable, 100,000. Okay? Credit, bonds payable at face amount, 5 million. Then the equity portion, again, credit this, but because this is now a convertible bonds, the account title that we will use will be share premium, okay, conversion privilege, okay, share premium, conversion privilege at 600,000. Okay? So, that is on the date of issue, no? Same concept lang talaga siya actually. Instead of share warrant, share premium, conversion privilege tayo. Okay? Share premium, conversion privilege. Okay? Let me just clear my writing, ha? Conversion privilege. Okay. So, that is on the date of issue. Now, when it comes to bonds, convertible bonds, okay, there are two scenarios that we need to, that we are to encounter here after the date of issue. Okay? Well, wag lang sana tayong malito na after the date of issue, same pa rin to siya, plain bonds payable na as to sa payment of interest, as to sa amortization of premium, same lang din yung the way how we treat it per accounting. This concept also goes with bonds payable with share warrants. After the date of issue, same pa rin tayo. Di ba? What is important to note there is that, again, kung plain and simple bonds payable lang sana ito, okay, pure financial liability, we do not need to allocate the issue price, di ba? But because this is a compound financial instrument, we need to allocate it to get to the allocated price of the bonds payable. Doon lang yung diferensya natin dyan. However, pagdating na sa amortization of the premium or discount or sa interest payment, same na yan siya lahat. Okay? Same na yan siya lahat. Same as if pure bonds payable na siya. Okay? Now, after all those transactions, here now lies another major difference when it comes to conversion of bonds. Because a convertible bonds, can be converted, so meaning can be transferred into share capital, or the conversion privilege will be forfeited, and as if regular payment of the bonds na. So that is the complexity there, no? How do we treat if it is converted, and how will be the treatment if there is payment lang? Okay, if there is payment lang. Okay? Now, let us go first with what if it is converted? Okay, what is if it is converted? Now, on conversion. Okay? Now, we have to remember this concept. If bonds is converted into shares of stocks, into share capital, it is as if there is just a reclassification from one instrument to another, di ba? As earlier discussed. So, from debt to equity. Thereby, if there is just a reclassification from debt to equity, there will be no gain or loss on conversion. Klaro yun siya, ha? Because it is just a reclassification from a debt instrument to a equity instrument, no gain or loss on conversion. Klaro yun. Whether the conversion would occur prior or on the date of maturity. Okay? No gain or loss. Okay? If there is no conversion, so meaning, payment of bonds payable lang talaga, payment of bonds payable lang, like the regular extinguishment of bonds. If the bonds are extinguished prior to maturity, then if the extinguishment price or the payment prior to maturity, or the price prior to maturity is lower or higher than the carrying amount, then there is gain or loss on extinguishment. Again, prior to maturity, if there is payment, no conversion, same concept with regular retirement of bond, wherein we will recognize any gain or loss depending on the retirement price. If the retirement price is lower than the carrying amount, then there is a gain on retirement. In this particular case, if the payment prior to maturity of the convertible bond is lower than the carrying amount, then there is gain. Okay? If the payment is higher than the carrying amount, then there is loss. No? We all know the concept of retirement, di ba? Kasi nga, pag ang ibabayad natin mas maliit kaysa carrying amount ng utang natin, obviously, there is gain. Gain on our part. Pero pag ibabayad natin, mas malaki kaysa carrying amount ng utang natin, then there is loss on our part. No? That is the concept. Pag payment with no conversion. Okay? Then, okay, we will go with payment later, no? So let us just focus with conversion. Okay? So, what if these bonds are converted on maturity date? So that means maturity date is January 1, 2025. So, the first thing that we need to do when there is conversion is to compute for the total number of shares converted. Okay? So, in this particular example, okay, wala siya nalagay, no? Sige. Let's say na um, each bond of for example, which is each 1,000 bond, can be converted into 20 shares. Okay? Again, let's say each 1,000 bond of this particular example can be converted into 20 shares. So that means na if we have a 5 million face value bond, then ang equivalent basic unit niyan is 1,000 per bond certificate. We have, again, 5 million divided by 1,000. We have 5,000 certificate or 5,000 bond. 5,000, 1,000 peso bond. Diba? Ganun yun siya. Then, that can be converted into 20,000 share per 1,000 bond. So, 5,000 times 20. So, the 5 million bond can be converted into how many number of shares? Computed as 5,000 times 20. So that is 100,000 shares. Diba? So, this is on the date of maturity, ha? So, 1,000 shares multiplied by the par value, the total amount of the share capital converted is 5 million. Okay? Share capital. That is 5 million. Okay? Now, also, on the date of conversion, let us also remember na parang retirement na din ito. Now, we will extinguish the bond, but instead of paying it, conversion of shares. So, we need to debit the bonds payable at carrying amount. Diba? Which, on the date of maturity, the carrying amount is equivalent to its face amount. Bakit equivalent na siya sa face amount? Kasi nga, date of maturity, any premium or discount is fully amortized. Any bond issue cost is fully amortized. Okay? So, now, entry on January 1, 2025. Okay. So, number 1, we need to debit bonds payable conversion to at 5 million, which is the carrying amount equivalent to face amount. Then, credit share capital at 5 million. Okay? Now, ano pa bang kulang dito? Diba, if you may notice, meron tayo nito, 600,000 na share premium conversion privilege. We need to classify this. In short, we need to close it and reclassify it to another account, which is still a share premium, but this time, this is now not conversion privilege, but issuance. Share premium, issuance. So to close it, we just need to debit share premium conversion privilege, okay, conversion privilege at 600,000, then close it to share premium issuance na 600,000. So that will be your entry on conversion. Diba? Simple lang, no? If you may notice, the carrying amount is equivalent to share capital. Now, this is just coincidence lang ha. Baka sabihin nyo na face amount is always equivalent to share capital. No. This is just a coincidence. Okay? What is correct is that share capital is computed as the total number of shares converted multiplied by the par value. Okay? Multiplied by the par value. The bonds payable obviously is always computed as the carrying amount, diba? The share premium issuance, okay, in this particular example, it just so happen na because the share capital is equivalent to the face amount, parang ang nangyari, pure reclassification lang siya. Okay, pure reclassification. However, if the carrying amount of the bond is higher or lower than basically if it is higher than the share capital, obviously much higher pa itong share premium on issuance natin. Because basically, if we are to compute it on a tabular form, okay, the share premium issuance is computed as the bonds payable, okay, carrying amount, okay, bonds payable carrying amount plus share premium, okay, share premium conversion privilege, okay, less share capital. So that will be your share premium issuance. Okay? So, klaro yan siya ha? Bonds payable or carrying amount of the bonds payable plus the share premium of the conversion privilege minus the share capital, that will be your share premium issuance. Okay. So, okay. Now, meron pa tayong mga ibang scenario dito, no? Okay. Let's analyze this one by one now. If there are any accrued interest which is still unpaid on the date of conversion, we need to pay it. Klaro yun siya ha? If there are accrued interest on the date of conversion, we need to pay it. Okay. If there are conversion expenses related to the conversion, okay, we need to pay it, but we will not record conversion expenses. But rather, we will charge it to share premium issuance. Okay, we will charge it to share premium issuance. So, how will we do it? Okay. So, let's say, example lang, no? There is an accrued interest on January 1, okay? 600,000. Okay, there is an accrued interest of 600,000 on January 1. Okay? And no, this is not 600,000. We need to compute the accrued interest for 1 year. Let's say 1 year yung accrued interest. Okay, 1 year. So, basically, this is computed as the face amount multiplied by the nominal rate of 10%. So, that is 5 million multiplied by the nominal rate of 10%, that is 500,000. So, this is your accrued interest. Okay? Let's say 1 year yung accrued interest. Okay? Now, let's also say na there is a conversion expenses let's say, amounting to 200,000. Okay? So again, we need to pay the accrued interest. The conversion expense, we need also to pay it because, yun nga, hindi mapupush through yung conversion if we will not pay it. Then, instead of recording it as a conversion expense, we will charge it to share premium issuance. Okay? So how will we recognize that entry on January 1, 2025, date of conversion? Okay? So, same pa rin tayo. Debit bonds payable at 5 million. Okay? Debit share premium. Okay? Conversion privilege. Okay? At 600,000. Ito yun. Ha? Credit share capital at 5 million. Okay? I know, may kulang tayo, wait. Wait. So, after recording your share premium debit of conversion privilege na 600,000, recognize now the accrued interest, which is debit interest payable of 500,000. Diba? Of 500,000. So, next, credit bonds payable. Okay? Credit bonds payable of 5 million. Okay? Now, your share premium, okay? Your share premium issuance now, because we have a 200,000 conversion expense, is now not 600,000, but rather, how much? 400,000. Okay? It's now 400,000. Then the last credit will be for cash. The cash payment applicable for the accrued interest and the conversion expense, which is accrued interest of 500 plus conversion expense of 200,000. We have 700,000. Okay? So, that is your entry on the date of conversion. Diba? So, recap. In converting your bonds payable, number 1, you need to compute for the number of shares converted so that you can get the share capital to be issued. Okay? Next step is that to compute for the share premium issuance, which is computed as the carrying amount of the bonds payable, okay, plus the share premium applicable to the conversion privilege, less the share capital. Okay? After, if there are accrued interest, debit interest payable, credit cash. If there are any conversion expenses, we will pay it with cash or credit it with cash, but we will not record any conversion expense, but rather charge it to share premium issuance. So, madali lang, di ba? Madali lang, no? So, that is for conversion. Okay? Now, if you may notice, bakit wala na tayong record nito na discount on bonds payable, which originally, on issuance date, on January 1, 2015, di ba nag-debit tayo dito? Bakit ang conversion wala na siya? Obviously, okay, on maturity date, which is the date of conversion, there is no more discount or premium to amortize because again, it is fully amortized on maturity date. Diba? Yun nga. It is fully amortized on maturity date. Kasi nga, diba, if we are to make an amortization schedule table nito, diba? On maturity date, the carrying amount is equivalent to the face amount, which tells us that any discount or premium is now zero. Okay? Any discount or premium is now zero. Okay? So that is for conversion. Okay. Now, how about, okay, what if instead of converting it, the holder, okay, or the investor of the bond forfeited its conversion privilege and instead opted na dapat bayaran talaga siya with cash. So, there are two accounting problems na ma-encounter natin dyan. If the conversion or if the payment occurred prior to maturity or if the payment occurred on maturity date. So, let us deal first with on maturity date. So, same example pa rin tayo. Okay, same example. Ito, okay? So, let's say, this was paid on maturity date instead of conversion. Okay? Instead of conversion. So, if this is paid on maturity date, obviously, walang conversion. So, walang conversion expense. Okay? Walang conversion. So, walang conversion expense. What would remain is the accrued interest and the payment of the carrying amount. Okay? So, how will we recognize it? Obviously, on January 1, 2025, debit bonds payable pa rin. Okay? Debit bonds payable at 5 million. Okay? Next, debit the accrued interest, which is interest payable at magkano nga yun? 600,000. Debit, because maturity date na siya, we need to close the share premium conversion privilege or the equity portion on the date of issuance allocated to the equity side, di ba? So, debit share premium, okay? Conversion, okay? Privilege na baliktad. 600,000 yung share premium natin, 500,000 yung accrued interest. Okay? Because walang conversion, diretso na tayo, cash, payment of bonds payable na. Payment, diba? So, magkano yung payment? 5,500. The carrying amount, which is equivalent to the face amount on the date of maturity, 5 million plus the accrued interest of 500,000. So, 5,500,000. Then, reclassify the share premium conversion privilege to share premium issuance at 600,000. So, dali lang. Diba? That is on the date of payment on maturity date for convertible bonds. Okay. Now, ito yung medyo komplikado. What if, okay? What if the payment, okay, wait, I'll just erase the board, okay? Okay. Okay, so now, what if the payment, okay, is prior to maturity date? Okay? Payment prior to maturity date. Now, so, medyo magiging komplikado ito because again, we need to recognize gain or loss on extinguishment of the bond. Okay? Basically, the concept of the gain or loss on extinguishment is the same as gain or loss on retirement. Di ba? Of bonds payable. So, number one, we need to compute for the gain or loss on extinguishment, which is computed as the um, carrying amount, okay? Carrying amount of the bond on date of payment. Now, less the extinguishment price or payment price. Okay, extinguishment price or the payment price. Now, you have to note or we have to remember now na the comparison to get the gain or loss is the carrying amount on the date of payment. So that means we have to compute for the carrying amount on the date of payment. So in computing for the carrying amount, we need to know what is the value of any premium or discount on payment date. So we need to establish the table up to the payment date, okay, to get your carrying amount. Compare it with the extinguishment price, then you'll have your gain or loss on extinguishment. Okay? Extinguishment price or payment price. Okay? Now, here's the catch. Okay? Here's the catch. For convertible bonds, okay, for convertible bonds, prior to maturity date, the extinguishment price that we are to use in computing the gain or loss is not the full extinguishment price or is not the full payment price. Because again, in concept, if the bonds is paid prior to maturity, it is as if na babayaran mo rin yung equity portion. Okay? It is as if na babayaran din yung equity portion of the issue price on original issuance. So, kumbaga, if you, parang same concept on the date of issue na on the date of payment, we also need to allocate the extinguishment price noted. Allocate it between the liability portion and the equity portion. How should we allocate it? Same concept pa rin. Use the fair market value of the bonds without the conversion on the date of payment. Any excess, applicable na siya sa equity, which in this particular date, on the date of payment, is charged now to share premium conversion privilege. Okay? Share premium conversion privilege. So, let us illustrate that, ha? Continuing with our December 31, 2020, we have a certain convertible bonds whose which face amount, let's say, still at 5 million. Okay? Which face amount is still at 5 million. Okay? And then, the balance of the discount on bonds payable, let's say, 80,000. Okay, the balance of the discount on bonds payable. This is another example, okay? Then, okay, now, this particular bond, convertible bond, supposedly, maturity date of this, okay, let's say December 31, 2022. Okay, maturity date. However, on December 31, 2020, this was paid. So, prior to maturity date, yung payment. Okay? Prior to maturity date. Now, let's say na on December 31, the share premium bond conversion, let's say 600,000. Okay, the share premium bond conversion still at 600,000. Then, okay, I think that's it. Pwede na. Okay, let's say ganito, simple illustration lang. Then, okay, on December 31, 2020, let's say na the bond holder or the bond issuer asked the bond holder na it would pay the bond, okay, it would pay the bond at a payment or extinguishment price, let's say 110, para papayag lang talaga siya na i-pre-terminate yung bond. So, kumbaga at a premium yung retirement price, okay, at 110. Okay? This bond, okay, this bond on December 31, 2020, okay, on December 31, 2020, which is the payment date, without the conversion privilege, has a fair market value of, again, let's say, 102. Okay, fair market value of bond without the bond conversion of 102. Okay? Now, so, no. Okay. So, the concept is, okay, again, if bonds are paid prior to maturity, if a convertible bond is paid prior to maturity date, It is as if na ang nangyari is during issue date na parang i-allocate natin yung issue price between the liability portion and the equity portion. So in this particular case, the issue price of 110%, which is basically 5 million times 110, that is 5,500,000 na extinguishment price or payment price or retirement price, okay, na 5,500,000 should be allocated to the liability portion and the equity portion using the fair market value of the bond, which in this particular case at 102, any excess equity portion na yun siya, which is ang equity portion, that is the portion close to your share premium conversion privilege. Again, if fair market value is not known, we will use the present value. Okay? If the fair market value is unknown, we will use the present value. So in this case, if the fair market value of the bond without the conversion privilege is 102, then 5 million times 102, that is 510,000. Okay? That is 510,000, sorry. Wrong. So 5 million times 102%, that is 1.02, that is 5 million that is 5,100,000. So this is your fair market value. This is your retirement price. So retirement price, 5,500,000 less the allocated for the fair market value of the bond. So 400,000 is the equity. Okay? 400,000 is the equity or applicable to the conversion privilege. So ngayon, no, ito yung sinasabi natin na medyo diferensya if it is a normal retirement. Because kung normal retirement sana to, ang gagamitin is itong full 5,500,000, which is the retirement price or the payment price or the extinguishment price. But because this is a convertible bond paid prior to maturity, we need to allocate the payment price. So, we now know na 5,100,000 yung gagamitin natin in computing the gain or loss on extinguishment. Okay? To compute for the gain or loss on extinguishment, which is computed as the carrying amount less the fair market value or yung allocated payment price. So to compute that, okay, carrying amount, let us compute the carrying amount, which is computed as face amount na 5 million, di ba? Yung face amount natin is 5 million. Less the balance of the discount, which is 80,000. Yeah, discount on bonds payable. We have 4,920,000. This is your carrying amount. Okay? This is your carrying amount. Now, carrying amount, okay, 4,920,000 less the fair market value or the allocated price for the bond, okay, or the allocated price for the bond na 5,100,000. So, okay, so we now have a loss on extinguishment. Okay? Na computed as 4,920 less 5,100,000, we have a loss of extinguishment of 100,000. 80,000. Again, the question is, bakit loss? Because in concept, nagbayad tayo ng 5,100,000, yung utang lang dapat natin is 4,920,000. Okay? If this is lower than your carrying amount, then that is a gain. Okay? Now, so this is payment prior to maturity date, ha? So how will we recognize this per entry? Okay. So number 1 debit natin, bonds payable. Okay? Wait, let's correct. On, ano nga yung date natin? Payment, okay, December 31. Okay. On December 31, 2020, the entry would be basically debit bonds payable. Okay? At 5 million. Okay? Then, because we have a loss on extinguishment, debit loss on extinguishment of bonds. Okay? Or the same with loss on retirement. Yeah? Same lang yan siya, no? 180,000. Okay? Now, the next entry would be to credit. Okay? Would be to credit or, okay, to recognize the equity na sa equity portion sa extinguishment price, which is itong 400,000, debit share premium conversion privilege. Ito yung sinasabi natin kanina na as if binayaran din yung share premium conversion na 400,000. Okay? Na 400,000. Okay? Now, okay. So, the next entry for this, okay, is, okay, tingnan natin. Okay. Is to credit cash, which is yung payment natin na 5,500,000. Diba? Ito yung extinguishment price. Then, lastly, we will credit to close the discount on bonds. Shortcut na lang natin, ha? To close the discount on bonds payable na 80,000. So, that will be our entry sa payment. Okay? Now, if you may notice, okay, yung share premium natin, di ba, started with 600,000. Tapos, yung na-close natin is only 400, which is applicable sa allocated equity. So, what would happen to the 200,000 na balance? 600 minus 400,000 na na-close. We will close it to share premium issuance. So, another entry would be to recognize the closure of your share, the full closure of your share premium conversion privilege na debit share premium conversion privilege at 200,000, the remaining balance after deducting the 400, credit share premium issuance to transfer this fully at equity. 200,000. Okay? So, that's it. No? Payment before maturity date. So, recap lang, no? If convertible bonds are paid, okay? If convertible bonds are paid prior to maturity, then we need to compute for the gain or loss on extinguishment. It is the same concept with gain or loss on retirement. It is computed as the carrying amount minus the extinguishment price. The difference is that in this scenario, the extinguishment price is the allocated price for the liability portion. So we need to allocate as if the same with, or is it the same during issuance na allocate first sa the liability portion using the fair market value of the liability if it is known. If it is unknown, then we'll use the present value. Okay? Then we'll use the present value. So, yun. Okay? So, next video natin, we will try to solve exercise problems. Okay? We will try to solve exercise problems. And then, for us to fully understand the concept, no? Actually, medyo nakakalito siya, no? But then again, simple lang, further readings with reference materials. So then, the next time, we'll try to solve exercise problems. Okay? So, that's it for compound financial instruments. Okay? So, see you in the next discussion again.